Hey everybody, welcome back to KF Trades. Today we're going to talk about some monthly dividend stocks that will work well in this type of environment. Let's get out there and make some money. Okay everybody, the stocks I'm going to talk about are Reits. And the nice thing that you really just need to know about Reits is they have to pay 90% of the taxable income in the form of shareholder dividends each year. And on top of that, with the way the market is right now, with higher inflation and higher interest rates, REITs do really well under those conditions. So it's something you may want to look at. The first one we're going to look at is SL Green Realty. Now they deal in Manhattan commercial property, so some higher end properties. And they have, we look at the 3-year chart here. Back during the pandemic, these are the 2020 lows right here. So this 45 resistance, stock's running about $49 right now. So there could be some little bit of downside, but this one's getting close to a buy. Right now, the relative strength index is at 12 to 13. That's getting pretty low. And the stochastic is at 3. So that's getting pretty oversold. So I would keep an eye on this one. It's getting close. If not, it's already there, depending on what the Fed does in the morning. So they have an average price target of $79. So we're at $49 right now. You got some nice upside potential right there to push up towards that resistance at 80. So obviously everything's up in the air. We're starting to see some good volume in this one. If we start getting over 1.5 million, 2 million shares on a day, might start to see that really oversold. But I think this one's getting close. You could possibly start nibbling on this one. If it gets down to the 45 or lower, you could definitely start jumping on that one. But this one has been oversold for a while. I mean, it's been oversold since probably April. It hasn't gotten over. Yeah, this one's been oversold for a while. So this one might be one of the first ones you may want to look at. They have a nice dividend. They have a yearly dividend of $3.72. Okay, the next one that we want to talk about is EPR Properties. Entertainment properties. So they invest in amusement parks, movie theaters like AMC or dine-in type stuff, ski resorts, and other entertainment venues. And this is a 3-year chart, and this uptrend right here stems back to the 2020 lows from the pandemic. And if you look, they just broke below it, and they're up against some resistance right around the 43 area. So it kind of touched that today, bounced off of it, but who knows, we could have a little bit more downside in this market. But just another one to keep on your radar. EPR has a yearly dividend of $3.36. Average price target on it right now is $58. So you got a little bit of room for upside movement here. And who knows, there may be some price adjustments, but it's another one to keep on your radar. The trend right now, obviously, still in a downtrend the way the market is right now. But I think you're reaching a good buy point on this one too. Especially to start picking up a nice monthly dividend. Let's see here, the stochastic on this one and your relative strength index. Your relative strength index on this is below 30. It's down at 19. Same thing with your stochastic. Stochastic's at 4 right now, and you should start to see this level off pretty soon, I think. I mean, you could start watching this one. My next resistance is down here just below $40. you may get there, but I would start watching this one over the next week or so. Okay, the next one I want to talk about is Stag Industrial. And this is going to go hand in hand with the next one we look at. And I'll explain that as we go along here. But right here, we have good resistance at $29, which is kind of some low resistance, $29.35 to $30 from before the pandemic. And we're getting close to that. And you would think that that might be some good resistance right there. Obviously, we bounced off of that area several times right here. Right here, we bounced off it back in September of 2020, again in December, and then in February the following year in 21. A lot of good resistance right there, so I'm hoping that that 29.35 area right here is going to be pretty good resistance on that one. Their biggest customer is Amazon. And what they do is if you go to the airports and you see all those commercial buildings out there, those big warehouses, that's what they invest in. So here they have 551 sites in 40 states. They're a pretty good sized company. And like I said, this 29.35 area is good resistance. Their average price target right now is $45. So you got $15 upside left on this one. A little bit more if it heads down to this 29.35 area. If it happens to break that and continues down, 26 area is my next resistance. The relative strength index just got below 30, so it's going to be ready for a nice return back up, hopefully. And your stochastic isn't quite there in the oversold area yet, but it's getting there. So that's why I think this one might continue down a little bit more. We should see this 29.35 area. Hopefully it holds there. If it doesn't, like I said, watch this 26.50 area roughly. Yearly dividend of $1.44. Okay, everybody, this is Gladstone Commercial Corporation. And the reason I'm pairing this with Stag is they are very similar to Stag. They do the exact same thing. It's just they're a little bit smaller company. And the reason I bring this one up is that the stock is only $18 right now. If we go back, so here's the 3-year chart on it. Just after the pandemic where it shot up a little bit. Got some good resistance right here at about 1750 area. And it's getting pretty close to that. And I was just reading some news on it to where they've signed some new properties and started to really grow, so I think there's some good potential on this one. Average price target's only $24, so that's why it might be good to wait on this one just a little bit longer. You can see right here the relative strength index on this one just went below 32. All of these are starting to get oversold, but the stochastic's only at 14 right now, so I think this has a few days left on it to get. And it may play around down here at the bottom, but I think that 1750 hopefully will be a nice area to hold. But they did miss their earnings last time, and that's why I have that note on there. They missed kind of bad, so we might get a little bit more pullback in this one. But the reason I bring this one up instead of Stag is their dividend pays more. They pay $1.56 a year. Obviously, there's always a caveat of somebody reducing their dividend payout. I mean, you could invest $1,800, buy 100 shares here, and get a higher dividend rather than, paying $30,000 and buying 100 shares and getting less of a dividend. It's a little bit more substantial company at Stag, but the potential with good starting to grow more, there is potential there, I believe. But it's something to keep on your radar. There's 3 to 4, depending on which one you go with, whether good or Stag, but a couple of good opportunities for some monthly dividends.